All right, so are you ready to like really step up your trading game?
Yeah.
You know, I bet you're trying to figure out like if it's all about technical analysis, just staring at charts all day long,
Right.
or if you really need to like dive deep into economic reports and company earnings and all that stuff.
Yeah, it's a question that every trader asks.
Yeah.
Especially, these days with all this talk about like market manipulation.
Oh, yeah.
It can feel like the system is rigged against you.
Totally.
Yeah.
And that's why today's deep dive is going to be, I think, really interesting.
Yeah.
We're going to break down some wisdom from this guy, Nico. And he's a seasoned trader. He's been doing this for a long time.
Yeah, he's got a lot of experience.
He's built a really successful career by kind of throwing out the rule book.
Yeah, and he actually says straight up
Yeah.
that the whole technical analysis versus fundamental analysis debate is a complete waste of time.
He really just says that.
Yeah.
Like that's like trading 101, isn't it?
Right.
That's like what everybody learns first.
Exactly.
And I got to admit, when I first heard him say that, I was like,
Yeah.
wait, hold on a second. But hear me out, because his reasoning is pretty interesting.
Yeah, it really makes you think.
Yeah.
So his main point is that if you're only looking at price charts, you're only looking at the technicals, you're missing the bigger picture.
Okay.
It's like trying to solve a crime by only looking at the footprints.
Right.
But without considering, who might have a motive.
Ooh, I like that analogy.
Yeah.
So it's not enough to just know that a price went up or down.
Right.
We need to understand like the forces that are driving those movements.
Exactly. Yeah. And all those fancy technical indicators that people use,
Yeah.
they're all based on past data. They might show you patterns,
Okay.
but they can't predict the future.
So all those like, breakout patterns and support levels and all that stuff,
Yeah.
that's not foolproof.
Not even close.
Really?
Think about it. I mean, you've probably seen it countless times when a stock was supposed to break out and it just fizzled.
Oh, yeah.
Or a price that just sliced through support like it wasn't even there.
Ouch. Yeah. I've definitely been burned by those fake outs before.
Right.
Yeah.
So relying solely on technical analysis is like driving a car,
Okay.
but you're only looking in the rearview mirror.
Okay.
It might tell you where you've been,
Right.
but it doesn't help you navigate where you're going.
That's a really good point.
Yeah.
Okay, so what about fundamental analysis then?
Right.
What about all those economic reports and news events and company earnings?
Right. All that stuff.
Surely that's got to be the answer, right?
Well, Nico actually agrees that fundamental analysis is valuable,
Okay.
but maybe for a different purpose.
Okay, so he says it's good for long-term investing
Yeah.
and maybe like understanding the overall market climate, but not so much for short-term trading.
Exactly. Yeah. News events can cause big price swings.
Yeah, for sure.
But predicting which way the market will react is a gamble.
Yeah, that's true.
It's like trying to guess which way a startled cat will jump.
Yeah, my cat's unpredictable enough as it is.
Right, exactly.
Yeah.
And here's another thing. Nico points out that market makers, those big institutions, the ones that are providing liquidity to the market,
Yeah.
they often pull back right before major announcements,
Interesting.
which amplifies those price swings even more.
So they're like skipping out of the way
Yeah,
right before the big the big news hits,
exactly.
and that makes the swings even bigger.
Exactly.
Wow. Okay,
Yeah.
that's really interesting.
Yeah.
He actually mentioned the volatility crush before the monthly jobs report
Right.
as a perfect example.
The non-farm payrolls.
Yeah, the non-farm payrolls. Everybody's waiting for that number,
Right.
but the market makers are already kind of playing their game.
Exactly. They're already ahead of the game.
Wow.
Yeah.
Okay, so if technical analysis and fundamental analysis aren't the whole story, then what is?
Right. What's the secret sauce?
What's Nico's secret weapon?
Yeah. What's the secret?
Yeah.
Well, he calls it a power combo
Okay.
of quantitative and behavioral analysis.
All right. I'm intrigued. Break it down for me.
Okay. So quantitative analysis that involves looking at hard data,
Okay.
like price action trading volume and something called order book depth,
Okay.
which we'll get into later. But yeah, it's all about analyzing the hard numbers.
And I bet he puts a lot of emphasis on like understanding how those market makers operate, right?
Absolutely. Yeah, that's his specialty.
Yeah.
But the real magic happens when you add in the behavioral analysis.
Yeah.
You have to figure out what different types of traders are doing, what motivates them,
Right.
and how that's impacting price action.
So it's not just about like what is happening in the market.
Yeah.
but why it's happening.
Exactly. Yeah, the psychology behind it.
From a human psychology standpoint.
Exactly.
This is fascinating.
Yeah. And to get this insight, Nico uses specific tools.
Okay.
Like open interest data.
Okay.
And something called cumulative delta volume.
Right. We're going to have to dig into those later.
Yeah, we'll definitely unpack those.
Okay. Before we get lost in the weeds here.
Yeah.
Let's address the big scary question.
Yeah. The elephant in the room.
Is market manipulation real?
Nico's answer is simple.
Okay.
Yes.
Wow. Straight to the point.
Yeah. No messing around.
But why does it happen?
Because it can.
Okay.
The very structure of the market allows for it.
Hmm.
Think about it. You have millions of traders.
Right.
All making decisions.
Yeah.
Based on their own unique circumstances, their emotions,
right.
their interpretations of information.
So it's kind of like organized chaos, right?
Exactly. Yeah. It's a recipe for unpredictability.
Okay.
And that inherent randomness makes short-term price action practically impossible to predict based on fundamentals alone.
So you're saying, like, even if you knew all of the fundamentals perfectly,
right,
you still wouldn't be able to predict what the market's going to do.
In the short term. Yeah, exactly.
Wow.
But then you have market makers,
right.
these big, powerful players who can essentially steer the market in their favor.
So it's like we've got, hordes of retail traders just making haphazard moves.
Yeah.
And then these disciplined market makers with their strategic game plan.
Yeah, it's a bit of an uneven playing field.
It is. That's a really good way to put it.
Yeah.
And this brings us to the heart of Nico's approach.
Okay.
The order book.
The order book, yeah.
That just seems like a jumbled mess of buy and sell orders to me.
Right. It can seem that way.
Yeah.
At first glance, it can seem completely random.
Yeah.
Even like quantum physics, as Nico describes it.
Quantum physics, wow.
But if you look closer,
go ahead.
There's a hidden order within the chaos. Market makers leave their footprints in the order book.
Okay.
Through their strategic placement and removal of orders.
So it's kind of like those nature documentaries.
Yeah.
Where they've got like a tracker and they can tell like all this stuff just from a few animal tracks.
Exactly.
Yeah.
Yeah, you can read the signs.
Wow.
If you know what to look for.
Okay, so we can actually learn to do that.
You can.
Learn to read those footprints in the order book.
Exactly.
That's incredible.
And it can give you a massive edge.
Okay.
Because you start to see the market through the eyes of the big players.
This is amazing.
Yeah.
Okay, how do we actually start doing that?
Well, one technique that Nico uses is called code stuffing, which involves rapidly adding and withdrawing large orders.
Okay, code stuffing.
Yeah.
Sounds intense.
Yeah, it can be.
It's like some kind of like secret market maker code, right?
You could say that, yeah. It's a tactic they use to disrupt the flow of orders by rapidly adding and withdrawing these large orders, often around key support and resistance levels.
Support and resistance levels. So you mean those like price points?
Yeah.
Where a stock kind of tends to like bounce or stall?
Yeah, those key levels.
Okay.
So imagine a market maker wants to accumulate a large position in a stock.
Yeah.
But they don't want to push the price up.
Right. They want to get it cheap.
They want to get it as cheap as possible.
Right.
So they might use code stuffing to create a false sense of selling pressure.
So they're trying to like scare off other buyers.
Exactly.
Make them think that the price is about to drop.
And make them think everybody's selling.
And then they swoop in and buy all the cheap shares.
Exactly. It's a very clever way to manipulate the perception of supply and demand.
Wow, that's wild.
Yeah.
But how can we as like, individual traders possibly compete with that?
Right.
It feels like we're playing checkers and they're playing 4D chess.
It can feel that way, but that's why understanding their tactics is so important.
Okay.
You don't have to beat them at their own game. You just need to know the rules they're playing by.
Okay. I'm starting to see the light here.
Yeah.
So if we can spot these code stuffing patterns, we can anticipate their moves.
Potentially.
And potentially profit from them.
Exactly. It's all about recognizing those footprints they leave behind.
Okay, this is starting to feel like we're like cracking a secret code.
Yeah, a little bit.
Earlier you mentioned open interest.
Yeah.
And cumulative delta volume.
Right.
As tools that Nico uses. How do those fit into this whole puzzle?
So open interest, that tells you how many active contracts are currently in play for a particular asset.
Okay.
But Nico goes deeper than just looking at the raw number.
Okay.
He analyzes where that open interest is entering the market.
So it's not just like the quantity.
Right.
But like the location of the open interest.
Exactly.
Okay, that's interesting.
Yeah. And then you have cumulative delta volume,
Okay.
which measures the difference between the volume of buy orders and sell orders
Okay.
that are actually hitting the market.
So it's not just about like orders sitting passively in the order book.
Right. It's about the actual flow.
It's about the actual buying and selling pressure that's moving the price.
Exactly. Yeah, the real-time action.
Wow.
Okay, so by combining open interest analysis with cumulative delta volume,
Okay.
Nico can get a much clearer picture of what's really happening behind the scenes.
It's like we're like piecing together a puzzle.
Yeah.
Like each data point adds another clue, and it helps us kind of understand the motivations and the behavior of different types of traders.
Exactly. You start to see the bigger picture.
Okay.
And here's where Nico's insights really challenge the conventional wisdom.
Okay.
He argues that instead of trying to avoid market manipulation,
Yeah.
we should learn to anticipate it.
That's a pretty bold statement.
It is.
But it makes sense, right?
It does.
If it's always going to be a part of the game,
Right.
we might as well learn how to play it.
Exactly. Learn to use it to your advantage.
Oh.
Remember, market makers have a job to do.
Right.
They need to manage risk.
Yeah.
They need to accumulate positions.
Mm-hmm.
And ultimately, they need to make a profit.
So instead of getting frustrated by their tactics,
Yeah.
we should try to understand their goals
Right.
and how they achieve them.
Try to get inside their heads.
Okay, so if you can think like a market maker,
Yeah.
you can start to anticipate their moves,
Mm-hmm.
maybe even profit from them.
Exactly. That's the goal.
All right, I'm ready to start thinking like a market maker.
Okay.
Where do we begin?
Well, we've already talked about code stuffing.
Right.
And how it can signal accumulation or distribution phases.
Yeah.
But there are other patterns and signals
Okay.
that you can learn to recognize in the order book.
Ooh, give me an example.
I'm all ears.
Let's say you see a large number of buy orders suddenly appear
Okay.
at a price level just below the current market price.
What does that tell us?
Well, it could be a sign that a market maker is trying to create a support wall.
A support wall. Yeah, they're essentially setting a price floor,
Okay.
signaling to other traders
Yeah.
that they're not willing to let the price drop below that level.
So it's a way of like influencing market sentiment,
Yeah.
creating a sense of confidence that the price won't fall further.
Exactly.
Wow.
And if other traders start buying into that belief,
Yeah.
it can become a self-fulfilling prophecy.
Oh, wow.
The price bounces off that support level,
Right.
and the market maker's strategy is successful.
This is so much more nuanced than just looking at a chart
Right.
and saying, oh, the price bounced off support, it must be going up.
Yeah, it's not that simple.
There's a whole psychological game being played.
Exactly. There's always more to the story.
Okay.
And understanding that game can be the key to unlocking consistent profitability
Right.
in the market.
Wow.
But remember, like any skill, it takes time and practice to master.
Don't worry, we're just getting started.
Yeah.
This deep dive is really opening my eyes to a whole new way of looking at the market.
Good. I'm glad to hear that.
But I have a feeling we've only scratched the surface here.
We've just laid the foundation.
Yeah.
There's much more to come.
What else can you tell us about Nicos' approach?
Well, Nico is a big believer in looking at longer-term market cycles. And this is where things get really interesting. Remember how we talked about market makers needing to accumulate large positions to really move the price? Well, those moves don't happen overnight.
Right.
They're often part of larger cycles
Okay.
that play out over weeks, months, or even years.
So we're zooming out from those like minute-by-minute order book battles
Yeah.
to the bigger picture.
Exactly. Nico uses a fascinating example from the silver market to illustrate this.
Okay.
Remember back in the early days of the COVID pandemic when silver prices absolutely tanked?
Oh, yeah.
They plummeted all the way down to $11 an ounce.
Wow.
It was a bloodbath.
Yeah, I vaguely remember that. Everyone was panicking,
Yeah.
selling everything, and
Right.
it felt like the world was ending.
And that's exactly what created the perfect opportunity for the big players.
Okay.
While everyone else was selling in a frenzy, they were quietly scooping up silver at bargain basement prices.
So they used that fear and panic to their advantage.
Yeah, it's pretty ruthless, but also brilliant.
Yeah.
It's the classic buy low, sell high strategy, but on an institutional scale.
Right.
They created the conditions for that price drop,
Okay.
waited for the weak hands to fold, and then started accumulating.
It's like they compressed a spring.
Mm-hmm.
The more they pushed the price down, the more potential energy it built up for a massive rebound.
That's a great analogy.
Yeah.
And that's exactly what happened as the panic subsided and the world realized, hey, we still need silver.
Right.
The price started to recover,
Yeah.
More buyers jumped in, fearing they'd miss out.
Yeah, FOMO.
Exactly, and that buying pressure fueled an explosive upward move.
So the market makers engineered that whole cycle.
Yeah.
From the initial drop to the powerful rebound.
You could say that, and it highlights a crucial lesson for all of us. Don't just focus on the short-term noise.
Okay.
Zoom out and try to understand those larger cycles at play.
Right.
Look for those moments of extreme fear or euphoria, because that's where the biggest opportunities often lie hidden.
So if I'm seeing a market tanking and everyone's freaking out,
Yeah.
it might actually be a good time to start looking for buying opportunities.
Potentially, yes. Of course, you always want to do your own due diligence and assess the fundamentals. But remember, markets are driven by emotions as much as logic.
Right.
When fear takes over, it can create incredible opportunities that wouldn't exist in a more rational environment.
This whole conversation is making me rethink everything I thought I knew about trading.
That's good. That means you're learning.
Yeah.
So much of it comes down to psychology, understanding the game that's being played behind the scenes.
Yeah, it's a whole different way of looking at it.
And that's the beauty of it. Once you start seeing the market through that lens, you realize it's not some random chaotic system.
Mm-hmm.
There are patterns, there are forces at play, and you can learn to read them.
So we've learned a lot about Nicos' approach. We've talked about order book dynamics, market maker tactics, and the importance of understanding market psychology. But how do we actually put all this into practice?
Right. How do we take action?
How do we go from being a pawn in the game to a strategic player?
Well, the first step is the hardest you have, to change your mindset.
Okay.
Stop viewing market manipulation as something to fear or avoid.
Right.
Embrace it as an inherent part of the game, an opportunity to learn.
So instead of fighting it, we need to understand it and use it to our advantage.
Exactly.
Yeah.
Start thinking like a market maker.
Okay.
Ask yourself, if I were in their position, what would my strategy be?
Right.
What are my goals? How would I achieve them?
It's like putting on a detective hat, right?
Yeah.
Trying to decipher the clues and understand the motives of the big players.
Exactly. And the more you practice that, the better you'll become at recognizing those subtle signals, those footprints in the order book, those shifts in market sentiment.
This is really exciting stuff. I have to admit, it's a little intimidating, too.
Yeah, it can be.
There's so much to learn.
Right.
So much nuance to understand. It feels like a lifelong journey.
And it is, but that's what makes trading so fascinating.
Yeah.
It's a constant challenge, a puzzle that's always changing, a game that never ends.
Well said. And even though we've covered a lot of ground today, I have a feeling this is just the beginning.
Yeah, this is just the tip of the iceberg.
There's so much more to explore, so many more layers to peel back.
Absolutely. But hopefully this deep dive has given you a new framework for understanding the market, a new set of tools to add to your trading arsenal.
Definitely.
Remember, the most successful traders are the ones who are constantly learning, adapting, and evolving their strategies.
That's a great note to end on. So to all our listeners out there, keep exploring, keep practicing, and keep challenging yourself to think differently about the market.
Yeah.
You might be surprised at what you discover.
Happy trading.